There is one stock that is about to skyrocket. The company is FICO, Fair Isaac Corporation. It's the FICO you know from that credit scoring that's used by all the banks. It is a public company. There's no affiliation with the government. They've been around since the 1950s, and they had 500 million in revenue, 20% increase year over year. I'll jump into it if that's quarterly or yearly. I'm pretty sure that's just for Q3. And it's $1,000 stock, but don't let that stop you. It's not a massive market cap. It just hasn't done a split or anything like that. Remember, Tesla and Nvidia would be like multi-$1,000 stocks if they didn't do splits. So it looks a little weird to see that on your brokerage on your screen. It's kind of like Netflix. Netflix is $1,000 stock. So that's FICO. It's setting up well. It's just grinding up after recent earnings, which were good. There's another stock as well that is interesting, and it's kind of new. It's called AXTI. AXT is the company, and they do wafers for semiconductors for data centers. So the revenue is 30 million, almost up from about 15 to 20 million last year. Solid increase, and massive just vacuum of demand for this materials company that makes like the substrates for the wafers. I don't know what they do, but they're definitely in demand, and the data center build out doesn't seem to be slowing down anytime soon. There haven't been any major permitting hurdles or anything. In fact, there was a study recently that said that in areas where data centers were introduced, electricity prices actually went down for residents around those data centers. So could that study be a little bit doctored? I'm not saying that. I'm just saying maybe what's happening is there's so much power generation being brought in and built that there's been no disruption to communities, which is maybe by design. I don't know what it is, but the point is that was like the major public policy just black eye for the build out of data centers. So if that gets smoothed out, it's all systems go for AI and the GDP of the US. So that's good. FICO, you're going to need credit scoring pretty much as long as there's credit, which the banks are not going to let that go away. So I'm not saying these are super long-term holds, either of them, but let's jump into why they're interesting right now.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
So here's what these guys are up to. Their credit scoring systems used by, mortgage lenders and the ones that deal with government-related housing. So Freddie Mac, that's the confusion, I think, at least that I had. I thought FICO might be government-related. It's not. And they do have some contracts for data analytics with the government. But they're always have been, always are a public company. So as far as current revenue, I'm pretty sure that was quarterly, that hundreds of millions. For the whole year, they're projecting 2+ billion in revenue. Strong guidance. Especially makes sense given it's not like they are a interest rate sensitive company. They just do the credit scoring. They're not actually giving out loans or anything like that. And you're going to want even better credit scoring in a recession, I would guess. So this seems like a pretty strong, sector of a company. This is AXTI. We'll talk about that in a sec, but look at that move so far. Building up again for a move, but FICO definitely got crushed earlier in the year, a couple times actually. So it's only recently that it started to move up, but it does seem to be moving up pretty linearly right now. And You can probably see what I'm about to draw, and I'm not saying that these things always work, but there's definitely a volatility, ups and downs, sort of contraction that I'm at least seeing. I'm sure other people are seeing it as well. So this is this recent earnings move. It's up significantly. That's the earnings beat. And there's a pretty clear level around 17.50. So risk $20, look for $200. I know it sounds like a lot, but when it's only trading, 100,000 shares a day, it kind of puts it in the ballpark of whatever that is, 100,000 times 1,000. That's 100 million. Pretty average liquidity for most of these companies. It's the market cap is what it is. It's not crazy. It's $35 billion. So it's just sort of weird to see a company with $1,000 share price that's 50 million, but whatever. This is this other company, AXTI, that I think is super interesting. And it's setting up really well. It's not crazy extended. So I know 20% looks like a lot, but look at this move. 100% in about a month. So the market could pull this back a little bit, but it doesn't seem to really be following the market. And it's a pretty big company to not be following the market. Something's up in a good way. That net loss is less than expected. And, maybe it'll pull back a little bit, but that almost would be even better. I mean, look at all these moving averages coming together. Just another way to visualize what you can already see with your eyes, which is that it's getting all compressed and tangled up and stuff. So you can risk like 25 cents and make 10 times that, a couple dollars or more above this breakout. That is the AXTI opportunity. I mean, if we look way back here, $10 is definitely important. $9.90. I don't know about levels from over here, but that was so long ago that I don't know how important that level will be. Just saying, if it bumps below $10, maybe you don't want to risk $10. Maybe you want to risk $9.70 or something like that right here. So those are some specifics on the actual charts of those two companies. If we jump into AXTI a little bit more, here's the recent revenue. Here's the revenue a year ago. And there's a lot of demand for this particular, chemical, material, substrate, whatever chip person would call it. Sales of this rose 250%. It sounds like sequentially means since Q2 because of data centers. So big backlog of orders for that. And the guidance looks good. So everything seems good. Now, I do want to take a second just to look at what other companies are up to right now, because I didn't just land at these randomly. I mean, if you look across the market, there's a lot of opportunities, and some of them are exciting, some of them less so. FICO and Real, well, AXTI being two of them that are interesting right now. I talked about Real in another video. Obviously, all of these I'm showing are based, well, these three are flags, right? This one is kind of like a shelf bounce play, sort of just making up that word. SIM would be a high volume close, aka a earnings reaction. The whole point, of course, being you buy after the earnings comes out, so you're not guessing. And then Reddit is not really an earnings reaction because that was weeks ago at this point. This is more like a shelf breakout flag. I don't know what this is, but there's definitely some buying here after a long downward just rocky road for Reddit. So there are some other companies that are interesting that maybe you want to have on your radar. I think Coherent's interesting, but with this many days up, this probably trails off a little bit before going up. Futu is interesting. It's kind of a similar shelf like Reddit, except it's a Chinese stock, so I don't know if you want to bet on China right now. You can look at FXI and it looks pretty much the same as Futu. Baba does look like it's turning up, but I don't really have an idea of why China is a good place to invest right now. So not totally sold on that. Unity, I already talked about last week. It's also up significantly, so this might sort of taper off for a few days. It's definitely a big higher low here. I'm not saying it's going to do like a silver type move. I mean, this is crazy. Like little higher low here. This is actually barely a higher low. This is basically the same. And then just rocketed up, but that's based off a commodity, so that's not a great example. And then some other companies, IQV, this life sciences company, is interesting. Just sort of climbing, touching this moving average, which is 20 days, if it matters, and just keeps moving up. I'm not like wedded to any medical device or pharmaceutical companies. They're up a lot, these ETFs. So maybe just let those relax a little bit. Maybe I'm totally wrong. I just saw Lebu finally pulled back the biotech leverage ETF, XBI being the same deal. Twilio setting up as well after earnings. I think this is interesting. Kind of looks like a caterpillar. So maybe just needs to work itself out for a bit. The market needs to decide what it's going to do. If we can get over this level, that'll be pretty exciting. There's probably going to be some selling at the end of this month. December can be, it's kind of low volume right now is all I'm saying. So home builders went up. So XHB is the home builder ETF. Nail is one of them. So there's strength here, but I don't know if you can buy it right now. I mean, it'd be great if it came back a little bit, maybe tested like this level. I already talked about some of these power producers, which did have sort of a change of character, but there's a little bit of selling off in some of these energy companies, despite the energy ETF actually going up. Next era, see, same little bit of selling off. PAR actually went today. So not every energy company's selling off. Dyno didn't do anything. DK up a tiny amount. And then DVN went. So that's great. This shelf looks pretty awesome. Flag would be the word here. Just is so spiky. It just went sideways. It's like a perfect flag shelf thing. Gotta come up with better words. Iron, these bouncers aren't looking super exciting. I mean, these miners turned data center plays. Wolf had the bounce, the biggest one, and looks strong today. So maybe that'll continue strong. Cypher looks identical. But Iron, which has the Google partnership, looks pretty weak. And I don't know if this movement was kind of predictive of that. It definitely got hit on the 20th pretty significantly. Where Cypher and Wolf did as well, although they had days up prior to that hit, whereas Iron didn't really. So maybe that was a bit of a clue. I don't want to get too into details in the weeds here. This TTI had a little failed breakout today, but definitely is setting up. And I do want to keep this actually up on the list here of interesting stocks to talk about. NBIS is having a nice inflow here. And that's probably a good place to cut it for a sort of whirlwind tour of what stocks we've been looking at outside of just the two that happen to get highlighted in this video. So the ideas are notably FICO and AXDI, but there's a lot more context too. If you like these ideas, hit that like button. Helps people see the video, I think. I don't work for YouTube, but it might help. If you hit that subscribe, you get a free course on how to buy stocks before they go up. It's a catchy title. And if you want one-on-one help with your portfolio, for $25, you can try it out. There's some superstar testimonials over at stockscommunity.com and 7-day trial. See if it's for you. See you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.